Insolvency Canada. Is it illegal for an insolvent company to apply for the Canada Emergency Wage Subsidy? The Ira Smith team is absolutely operational, and Ira, in addition to Brandon Smith, is readily available for a telephone consultation or video meeting. We hope that you and your family are safe, healthy, and secure. If you have any questions about this blog or anything else, shoot us a message or give us a phone call. We would love to hear from you. Insolvency Canada Introduction. Canadian business restructuring, a type of Insolvency Canada, has been in the news lately and no doubt will continue to be for some time. The COVID-19 pandemic, the lockdown, and general fear have affected everyone, both Canadian business, employees, and all other Canadians. Everyone is forecasting that business insolvencies will rise as a result of the coronavirus. An interesting question posed to us recently is it illegal for an Insolvency Canada company to apply for the Canada Emergency Wage Subsidy, CEWS, or Cews? I have written a couple of blogs specifically on the Cews previously. Canada Emergency Wage Subsidy, Helping Your COVID-19 Business Recovery, and the Best Cews Extension News Reviewed. In this Brandon's blog, I discuss the concept of Cews and try to answer the question about insolvent companies applying for COVID-19 support. Insolvency Canada Cews Refresher. The Cews was established for an initial 12-week period from March 15 to June 6, 2020, offering a 75% wage help to qualified firms. Then on May 15, 2020, Prime Minister Justin Trudeau announced a Cews expansion for 3 additional months to August 29. The Cews safeguards work by assisting organizations to maintain workers on the payroll, as well as also encouraging firms to rehire staff members previously laid off. To date, 296,030 employers, representing 924,970 applications, have applied to the Cews program. Former Finance Minister Bill Morneau then announced in July that the Cews extension would consist of program changes that would broaden the reach of the program. It would certainly offer much better targeted assistance to guarantee that more workers can return to their work without delay as the economy reboots. The modifications announced in July for the Cews extension would prolong the program up until November 21, 2020, with the intent to provide additional support up until December 19, 2020. Make the aid available to a more variety of companies to include those with a revenue decline of less than 30%. Provide a slowly lowering base help to all eligible companies. This would assist various companies with much less than a 30% earnings loss get aid to keep employees. Present a top-up aid of around an added 25% for companies that have really been most adversely affected by the pandemic. This would be particularly practical to firms in markets that are recovering far more slowly. Offer assurance to firms that have already made business decisions for July as well as August by ensuring they would not have their benefits less than they would have had under the previous Cews program. Address particular issues brought up to the government's attention by various stakeholder groups. By helping people get back to work and sustaining companies as they try to grow their income, these modifications gave companies some certainty that they needed to recall workers. It is very possible that some employers would fall into an Insolvency Canada category. Insolvency Canada, the current Cews statistics. The Canadian government has approved 910,940 of the total applications so far. The approved applications by value are under 100,000, 863,700, 100,000 to 1 million, 44,900, 1 million to 5 million, 2,010, over 5 million, 240. And that totals 940,940. To look at, is it illegal for an insolvent company to apply for Cews, we first need to see what the requirements are. Could it be that applications have been made by Insolvency Canada employers? For sure it is. Insolvency Canada. When is an employer eligible for the Cews? The Cews was first set up through the passage of Bill C-14, a second act respecting certain measures in response to COVID-19. It received royal assent on April 11, 2020. It establishes the rules for the Cews program as amended and extended. For the purposes of the wage subsidy, an eligible employer is a company or a trust besides a corporation or a trust fund that is excluded from tax obligation under Part 1 of the Income Tax Act or is a public institution. An individual aside from a trust. A registered charity other than a public institution. A person that is exempt from tax obligation under Part 1 of the Income Tax Act, aside from a public institution that is a farming organization, a board of trade or a chamber of commerce, a non-profit corporation for shred activities, a labor organization or society, a benevolent or fraternal benefit society or order, and a non-profit organization. A partnership where each member of which is an individual or partnership in this listing, a prescribed company including certain indigenous companies or businesses. As you can see, the list is very exhaustive. The legislation does not exclude an insolvent company or mention anything about Insolvency Canada. The legislation also does not exclude a company that has filed for a corporate restructuring being either a proposal under the Bankruptcy and Insolvency Act Canada, BIA, or under the Companies Creditors Arrangement Act Canada, CCAA. Insolvency Canada. How does an eligible employer qualify for the wage subsidy? In order to get the wage subsidy in respect of a specific claim period, an eligible company needed to have on March 15, 2020, an open payroll program account with the CRA and was using that account to make its payroll remittances. Concerning the revenue test, a company's income for the subsidy includes its revenue earned in Canada on an arm's length basis, calculated utilizing the employer's regular bookkeeping approach. Companies can pick to calculate their earnings using either a cash basis or the accrual technique of bookkeeping. Companies have to make one use of the method they select when they first make an application for the Cews for the duration of the program. Employers cannot combine the methods. When a qualified employer has computed its qualifying revenue for each and every relevant claim period, it would determine if it has actually experienced the needed reduction in income to qualify for the wage subsidy for that claim period. However, the company is under no obligation to prove that the decrease in income is connected to the COVID-19 situation. If it does not qualify for one claim period, it is not barred from determining if it qualifies for any other claim period. There is nothing in the legislation that disqualifies an insolvent company that is an eligible employer from calculating if it meets the test for eligibility for the Cews. The phrase Insolvency Canada does not appear anywhere. Insolvency Canada. It is not illegal for an insolvent company to apply for the Cews. From my research, as described above, I have not found anything in the legislation that established the Cews that would make it illegal for an Insolvency Canada employer to apply for the Cews. If you think about it, this makes sense. The Canadian government was worried that companies shutting down meant all workers were laid off and be applying for the Canada Emergency Response Benefit, CERB. As the economy opened up again, the government wanted to make it easier for businesses to bring back some or all of their workers in a very unsettling and uncharted time. The aim of all the Canadian government support programs is to give assistance to struggling companies. There is an implicit assumption that companies could very well be insolvent and would therefore not be able to reopen unless they had financial support. So not only is it not illegal for an insolvent company to apply for the Cews, it is quite logical that an insolvent company would not reopen, or if it did, not hire back many workers. This is, in my view, one of the reasons why the Cews was established, to bring back Canadian workers to companies that could not otherwise afford to pay its employees if it could not receive back a refund for what it was spending on wages or salaries. Insolvency Canada. How would the Cews be treated under a formal restructuring? Whether the company is restructuring under the BIA or CCAA, the treatment of the Cews is the same. The Cews is taxable. You need to include the amount you get on the company's or business's income tax return when calculating your taxed revenue. You will certainly likewise be expected to report the amount of the Cews that was used to pay each of your staff members' incomes by utilizing a unique code in the Other Information area at the end of the respective employee's T4 slip. That specific information on the reporting needs has not yet been made public by the government. It presumably will be before the end of the year. So in either a BIA or CCAA insolvency business restructuring, the Cews should be shown as revenue in any cash flow statement prepared with anticipated receipt dates, income for accounting and financial statement purposes, and disclosed in the trustees' administrators' reporting to stakeholders. If it turns out that the employer involved in the formal restructuring did not qualify for a Cews payment for one or more of the periods that it applied and received one, then it is a liability to the government. How is that handled in the restructuring? There could be two answers. From my research, I do not see this specifically being addressed. You may need to return all or part of the Cews you have actually already received if you send to the Canada Revenue Agency any type of modifications to a previous application, terminate an application, made a calculation or data mistake for a claim, learn you do not qualify after getting a subsidy payment for a claim made, or receive a notice from the CRA that, following an evaluation, your claim has actually been lowered or disallowed. Any type of Cews overpayment you receive that is not returned will be subject to interest charges. In the very next Insolvency Canada section, I discuss what kind of liability a Cews overpayment would be in a formal insolvency restructuring. Insolvency Canada. What kind of liability is a Cews overpayment? The Cews is a subsidy payment made to you by CRA based on an application the insolvent company makes. Unlike a claim for unremitted source deductions or HST, it is not an amount the insolvent company collected, held in trust for, and failed to remit to CRA. So as far as I am concerned, it is not a trust claim. It would be an ordinary unsecured claim. The overpayment claim may not necessarily have been caught in the restructuring. If the insolvent company applied for the Cews and received the subsidy payment before making the restructuring filing under either the BIA or CCAA, then I believe it would be an ordinary unsecured claim in the restructuring. However, if the company applied for the Cews after filing for restructuring, regardless of the claim period, the overpayment claim would be a post-filing claim and not caught in the restructuring. All of the overpayment would have to be repaid, notwithstanding the formal restructuring. If not repaid, presumably CRA would offset any other amount payable to the company, such as for HST input tax credits, against the Cews overpayment liability in such an Insolvency Canada situation. Again, I caution that none of this appears in the Cews legislation. It is my opinion based on my experience and the review of the relevant legislation. I hope you have found this Insolvency Canada Cews Brandon's blog interesting and helpful. The Ira Smith team family hopes that you and your family members are remaining secure, healthy, and well-balanced. The Ira Smith team is fully operational. We are holding all meetings and answering all questions either by telephone or video meeting. Feel free, if you have any questions whatsoever about this Brandon's blog or anything else, to give us a phone call or send us an email. We would love to hear from you.